Our next guest,
Go ahead, coach.
has he arrived?
He seems to be here.
Okay. Our next guest is Peter Schiff,
There he is.
who's
Yes,
whose
I'm here.
whose reputation precedes him. Peter is well known for being a hard money advocate for many years. I might even be a bit older, but I've been following Peter's work for a long time. He's the CEO of the Euro Pacific Capital Inc. group. And Peter, welcome to our summit, and want to thank you for joining us. And you have to be feeling pretty good with what's happening to your favorite asset class, the precious metals, and nice
And the
to
miners.
and the miners. And this is the second time I've spoken to you. I spoke to you many years ago on FX Street. So welcome to our summit, Peter.
Well, thanks for having the summit and inviting me to be a part of it. But as far as gold and the mining stocks, what I'm happy about is that they haven't gone up yet, because it still gives me an opportunity to get more people into this trade. A lot of people should be considered it very fortunate that they have the opportunity, given everything that has already happened, to be able to buy gold at the price that it's at today, and in particular to be able to invest in mining stocks. This is really a gift horse for those of you who do not already have any position, let alone an overweight position, which you should have in this sector. And this could be one of your last opportunities to do this.
Okay, does that include silver miners too, Peter? Do you have a little different view on the fact that with the gold-silver ratio trading over 100, that silver is undervalued for a reason, or it's not a justified reason and will eventually revert to the mean of maybe more like it used to be when you and I didn't have as much gray hair, when it was trading about 60 to 1, 50 to 1. You think that's possible again?
Yeah, I think it's more probable than just possible.
Okay.
I think things have a tendency to revert to the mean. So I think that will happen. As far as why silver is so cheap right now relative to gold, look, a lot of things are very cheap right now. Look at the price of oil relative to gold. So gold buys a lot of things right now, other commodities. But I think it has to do with the fact that you don't really have the psychology of a bull market. I think people, investors who are looking at the price of gold still don't get why it's rising and how much higher it's going to rise. So there's still a lot of skepticism of the rally. I think there's a lot of expectation that it's temporary. Now, maybe it's just related to COVID-19. And, when this is in the past, the gold's going to sell off. So I think everybody's kind of been bracing for the gold market to sell off. We've really been climbing a wall of worry ever since gold really bottomed out in December of 2015 at about 1,000, 1,050 when the Fed first started raising rates. Everybody kind of expected the price of gold to fall, and instead it's been rising steadily against that backdrop. It's climbing this wall of worry. So I think once gold really takes off, once we take out those 2011 highs, around 1900, and the bull market really kicks into another gear, I think silver is going to participate and ultimately overtake gold as far as percentage gain.
So patience. Don't wait to buy silver and wait.
Yeah, I mean, you should buy. I think it's a good buy. I think it's, as a commodity, as an industrial metal, as a precious metal, a monetary metal, there's a lot of compelling reasons to own silver. And, you look at the alternatives, what else do you have as money? I mean, do you want to just own dollars or euros or yen? I mean, look at the rate that these currencies are being debased, particularly the US dollar right now. There's no interest that you can earn on any of these currencies anyway. So you might as well own real money. The yield on silver is the same as the yield on dollars, except they're not mining silver as fast as they're printing dollars. So you have a lot more purchasing power that you'll be able to store in silver or gold than in dollars. In fact, if you're in dollars, you're about to have your purchasing power robbed. I mean, we're going to see probably one of the biggest losses in the purchasing power of the dollar in the shortest period of time that we've ever seen in the history of this nation.
Let alone, Peter, do you think that this could be used, COVID could be used as an excuse in the war on cash, because the using cash can transmit the virus? You know, we've already heard that they were burning currency in China. Is Paul going to say, turn in your $100 bills? We're gonna get rid of cash. It'll be all debit card.
Look, COVID is going to be used as an excuse for a lot of things. I mean, it's kind of like a catch-all. Any problem that you're having, blame it on COVID. If you're a company and you were going to have trouble, your earnings were in trouble, or you had too much debt, blame it on COVID. If you're a state government, municipal government, you got underfunded pensions, you got all kinds of obligations, you're broke, just claim it's COVID's fault and ask for a bailout. The government could just... Look, we were going to be in a recession anyway, but now we could just say, oh, it's not because of bad monetary and fiscal policy. It's all because of this virus, and therefore it's nobody's fault, so don't blame anybody. And of course, the government uses COVID and the hysteria around it, whether it's real or just drummed up by the powers that be, but the government is using this emergency the way it typically uses emergencies, to assert more power and to diminish individual liberty.
Do you worry? And I'm going to introduce you to my colleague Steve Volge. He really admires you, Peter. He's wanted to speak to you for a long time. I think he even has a poster of you in his office.
He's joking. What is the reality, Mr. Schiff, is that I'm a Greek economist, but we are in the same school of thought. I mean, I'm an Austrian economist as well. We are probably a rare breed. We still believe in sound money and fiscal responsibility. One thing I wanted to add to your introduction, people that haven't seen your mortgage banker's speech in 2007, in my opinion, they should definitely do it. It should be taught in universities in economics. It should actually give credits. I think it's one of the best speeches I've ever seen.
Thank you. By the way, I did that in 2006. It was around November.
Yeah. And I remember the crowd and, how they took everything, you said, like, it's, the weird guy that's coming here and is trying to sell us on, a story that's far away, much decoupled from reality. Now, I want to touch on a few things that you've already spoken about. Because I'm also an Austrian economist, so I know the counter arguments as well, and I'm pretty sure the people would want you, making some points on them. We are seeing central banks double down on everything. Interest rate policies back to zero, monetary easing, trillions of dollars. Despite all that, the dollar is still strong, and for the gold thesis, the silver thesis, the minus thesis to play out, we should eventually see the dollar continue its long-term downtrend lower. When do you think that's going to happen?
Well, first of all, I don't think the dollar is strong. The price of gold is rising. In fact, it hit new highs over the past month or couple of weeks. And so if the gold is rising in dollar terms, then the dollar is weakening. The dollar is losing purchasing power. The way you measure the purchasing power of a currency is in terms of gold, particularly the US dollar. Now, the dollar has gained some value relative to other fiat currencies, but those fiat currencies have simply lost more value than the dollar. So the dollar is not strengthening. It's weakening less than other currencies that are weakening more. But I do agree that ultimately the dollar is going to be the weakest of the major fiat currencies. And, if you compare the dollar strength in this crisis to the dollar strength in the 2008 financial crisis, and this is another financial crisis, it's just a larger one, but the dollar had a much bigger rally back then than it's had now. And in fact, if you look at gold, right, gold dropped about maybe 30% early on in the 2008 crisis. This time around, it only fell about 15% and then quickly made a new high. It made a new high a lot faster this time than it did in 2008. And so to me, that really shows you that the dollar is much weaker today than it was back then. And after this temporary rise, just like we had a temporary rise in 2008, the dollar is going to roll over and collapse. But I think the big difference between the dollar now and the dollar back then is the dollar eventually stopped falling around 2010, 2011-ish, because the Fed was able to fool the markets into believing that it's 0% interest rates and quantitative easing, that the policy was a success. But not only that it was a success, but it could be ended, that the Fed had an exit strategy and that these emergency measures would be brought to a close, that the Fed was going to normalize interest rates and shrink the balance sheet back down to where it was before the crisis. And so that implied a much tighter monetary policy, the Fed selling off treasuries and mortgage-backed securities, shrinking money supply, raising interest rates back up to 4 or 5%, where they had been prior to the crisis. And so the markets, being forward-looking, the Forex markets, began to factor in that return to normal in the dollar. And so the dollar began to rise, and it had a very big rise in 2013, 14-ish, as the market started factoring in what the Fed was claiming it was going to do. Now, back at that time, I was stating that it was impossible, that the Fed could never do what it was claiming, and that the markets were foolish for believing it. I said that the Fed would have to abort its plans to normalize rates, and it could never shrink the balance sheet. If it tried, it would have to give it up. And I said eventually the Fed would go back to QE, and that QE4 would be bigger than QE1, 2, and 3 combined, and that the Fed would be back to zero. Now, that's where we are. Now, people have to, separate the bubble from the pin here. The coronavirus is the pin, right? The problem is the bubble that pin pricked. And of course, the bubble was deflating before it found that pin, because last year, 2019, before we had COVID-19, the Fed already fulfilled my forecast. It abandoned its feigned attempt to normalize rates. It cut rates 3 times in 2019. And the Fed went back to quantitative easing, even though it tried to pretend that it wasn't QE, it was doing quantitative easing. Now, once the coronavirus came and it accelerated the onset of this depression, then it accelerated the Fed's return to zero, and it really ramped up QE4 to the size that I forecast it would be. Now, once the dollar starts to fall, and it will, this time there's going to be no stopping the decline, because nobody is going to believe that the Fed is going to normalize rates or shrink the balance sheet. If the Fed couldn't shrink a $4.5 trillion balance sheet, what hope does it have of shrinking a $10 trillion balance sheet? If the Fed couldn't normalize interest rates when the national debt was 20 trillion, how is it going to do it when it's 40 trillion? And so once people realize that this is a permanent policy of endless money printing and debt monetization, and that the Fed has no ability to ever fight inflation with actions, it can simply talk, then the dollar is going to fall through the floor. That's going to happen. And the price of gold obviously is going to go through the roof.
Absolutely. There is no question about it. And a lot of people would say that Peter Schiff predicted 100% what's going to happen both in the previous crisis and this one. But despite being right on all his assessments of what's going to happen with the economy, the markets didn't actually play out in the way you expected in this case. So what makes you think that the market can't be fooled again? Yeah, not in believing that the Fed will normalize, because I assume that everybody understands now that this isn't happening. But what if they keep believing in the less dirty shirt theory, that, okay, the rest are easing as well, US dollar is still the world's reserve currency, and, we're already seeing stock markets having rebounded like 70% from the low.
Yeah, there's a lot of what ifs in there. And, I think what I got wrong initially, back in 2005, 6, when I was forecasting the financial crisis and the bursting of the housing bubble and the Fed's and the government's reaction, I assumed that the markets would be smart enough to figure this out. But I was wrong. I mean, the markets got fooled and the Fed was able to inflate a bigger bubble than the housing bubble. Right? I didn't think that they would get away with it. I thought they would try. I just didn't think they would succeed. Now they did. Now, just because they were able to blow up a bigger bubble than the dot-com bubble doesn't mean they're going to blow up a bigger bubble or even a bigger bubble than the housing bubble. Doesn't mean they're going to be able to blow up a bigger bubble than the one that just popped, which a lot of people had described as an everything bubble. We had a bubble in stocks. We had a bubble in real estate. We had a bubble in bonds. I mean, you name it, it bubbled up based on an unprecedented amount of cheap money. I mean, the mistakes that were made because of the monetary policies of Bernanke and Yellen and now Powell dwarf the mistakes that were made as a result of Greenspan. I mean, Greenspan, was like a Paul Volcker compared to what followed. I mean, he had interest rates at 1% for like a year and a half, and then it took him another year and a half to get back to 5, wherever he got. But what followed was unprecedented monetary excess and recklessness. And so the mistakes, the misallocations, the malinvestments dwarf what was made then. And I think it's impossible to blow up a bigger bubble than that one, which is required, is impossible. The Fed is going to try, will overdose on that stimulus. And, the dollar just has to collapse because it didn't happen last time. We dodged that bullet. Doesn't mean we're going to dodge it again. In fact, I think we dodged a bullet only to step on a landmine. And this is going to be a much bigger collapse in the dollar and in the U.S. economy than the one that should have happened following 2008, right? Because the problems got so much worse as we kicked the can down the road. So we would have been better off had we taken our medicine then when we weren't nearly as sick. And now the medicine is going to be much more a bitter taste.
We'd be coming out of it now, wouldn't we, Peter?
Well, we would have come out of it a while ago. And, that's why the economy is so ill prepared for this coronavirus. I mean, we were very sick before the virus came around. See, the reason that it's such a big deal is because nobody has any savings. Everybody is levered up. All these corporations have been, using all this cheap money that they got from the Fed, and they've been buying back their overpriced stock, but they're all levered up. U.S. governments have taken advantage of the cheap money, both the federal and the states, to go deeper and deeper into debt. It's enabled all this profligacy to continue. Had the Fed let interest rates go up, governments would have been forced to cut spending and reduce these debts. But they didn't have to make those difficult choices because the Fed gave them an easy way out. And then the same thing with individuals. American households are living paycheck to paycheck thanks to consumer credit. And you have record auto loans, credit card debt, student loans. People have mortgages, second mortgages, home equity loans. So no one has any money. Then all of a sudden we get this coronavirus and that disrupts everybody's incomes. And now nobody can pay their debts. And so we have this huge financial crisis as this whole house of cards implodes. If we had a real economy without cheap money, if we had real savings, then companies could go a few months without revenue. They would have, the balance sheets to do that. To the extent that they needed money, they could tap into the private sector for that money because we'd have ample supply of savings. Individuals can afford to be laid off for a few months. They would just use their savings to cover their rent or their mortgage or whatever. But we don't have any of that. Nobody has that. Thanks to the Fed, we've been living in a bubble. And that bubble has popped. And that's why people still don't get it. Everybody expects that, well, we're going to return to what we had before the coronavirus when it's over. That's impossible. We can't reflate that bubble. The best that we can do, right, is recover from a depression to a severe recession. There is no going back to what we had before the coronavirus because that bubble has been pricked and the air is not going to come back into it no matter how much money the Fed prints.
So, Mr. Schiff, what do you foresee being the end game to this unprecedented situation? As you said, yes, we see the law of diminishing returns. I mean, they have to throw in more money and more money every time to rescue the economy. At some point, it's definitely going to fail. What comes after that? The change of monetary system?
They're not rescuing the economy.
Yeah, that's true.
They're preserving the bubble. The bubble is the problem in the economy. The way you rescue the economy is you let the bubble deflate you let people lose money. You let asset prices come down. You let interest rates go up. You let the economy restructure so that we can have a viable, healthy economy again. But the road from where we are to where we need to be is a very difficult road. And it's one that no politician or no central banker wants to travel, especially on their watch. So we constantly make the mistake of worsening the problems and interfering with the free market's attempt to actually solve those problems. But, the other big difference now is that the free market and capitalism are going to be so discredited by this election that's coming up in November. And even the Republicans now have abandoned any pretense of believing in fiscal responsibility or capitalism. And every Republican still thinks that everybody should be bailed out, that everybody should get a check from the government, and no one cares where the money is coming from. Everybody is now bought onto the idea that the government has a pile of money and that can just dole it out to whoever needs it, and there's no consequence, that we all believe in a free lunch. Well, I think if the November election comes down to which political party can deliver the most free stuff, the Democrats are going to win that debate every time. And so we're going to make a sharp turn to the left officially. Trump I think will be out at the end of this term, and we're going to have a Democratic president. And I think the Democrats are going to take back the Senate, and so have the House and the Senate. And they're going to have carte blanche to dramatically increase the size of government, which has already increased massively under Trump. And the deficits, which have already exploded under Trump, are going to go through the roof. And all of it is going to be paid for by the Fed, which means none of it is going to be paid for. It's massive inflation. Where all this is going to be funded is through a destruction of purchasing power. See, the government has two ways of paying for its spending. It can legitimately tax us and take our money away from us and spend it, or it can create the money out of thin air, which it's doing now, and then steal our purchasing power and spend that. But one way or another, government must be paid for. And the most expensive way to pay for government is the way we're funding it now, when the Federal Reserve prints the money. Inflation is much more expensive. It's much more an onerous tax than a legitimate taxation, which is why people need to be buying gold and buying these gold stocks and getting out of the dollar. Because what they're really doing is avoiding that inflation tax, because this is going to be a massive bill that Americans are going to be stuck with. And anybody around the world who's been foolish enough to hold on to dollars, they're going to be stuck with this tab. All the bailouts, all the stimulus are going to be paid for through a loss of purchasing power in the U.S. dollar.
And do we have a hyperinflationary stage, Peter? And when does that kick in? And some people have a definition of hyperinflation at about 26% is where they believe we've broken into that territory. Are we going to have wheelbarrows full of dollars and people dump the dollars and seal the wheelbarrow?
Well, I don't know. I think the odds of that type of end game are much higher now than they were in 2008. I mean, I've always thought that was a worst case scenario, but I think it's actually a more probable scenario now because the only way to avoid hyperinflation is the Federal Reserve at some point is going to have to admit that everything it's done in the past was a mistake, right? That all the QE, all the 0% interest rates were wrong. So it's going to have to fess up to its past sins. And then it's going to have to finally do what it should have done but was afraid to do in the past. And that is let interest rates go to a market level, which is now going to be much higher than that market level would have been had they allowed that to happen, in 2008 or 2001 or, in the past. And because we have so much more debt now because of how low they kept interest rates and for how long, the defaults are going to be much bigger. And it's not just going to be private sector defaults. We're going to see government defaults. And I'm not just talking about states and municipalities that can't pay. I'm talking about the U.S. Treasury that can't pay the interest on the national debt or can't repay the principal. And the U.S. government not being able to make good its unfunded commitments to make Social Security payments, Medicare payments, payments for government retirees. All of these phony promises are going to have to be reneged on. And all of the people who have loaned money to the U.S. government are going to have to deal with reality that the U.S. taxpayer is too broke to make good those IOUs. So if the Fed does the right thing to prevent hyperinflation and lets interest rates go up and then lets everything collapse, and there's no bailouts. See, if the Fed is shrinking the money supply, nobody can bail out anybody. And of course, once it's the U.S. government that is broke, obviously it can't bail anyone out when it's broke itself. So we're going to have to finally swallow this medicine after years and years or decades of avoiding it, and it is going to taste worse than ever. The question is, do we have the political will to actually go through this type of default where politicians, have to slash government spending, default, let prices collapse, asset prices collapse, and go through this horrific economic downturn? But if we don't have the guts to do that, then we will have hyperinflation, because there's no way to stop the inflation once it's running amok like that. Once there's a loss of confidence in the dollar, how do you reinstill that confidence? You can't do it, right? So unless you let interest rates go way up or go back to a gold standard, but the minute we go back on a gold standard to reinstill confidence in the monetary system, then the party's over. You can't print gold, right? And so then the government has to start living within its means again. And that means a massive collapse. And our whole country, our whole economy has been a gigantic bubble. It's not just the government that lives beyond its means. It's America. It's American individuals. Everybody is just borrowing and spending. And the whole world has been making this possible by supplying us with the goods that we don't produce and loan us the money that we don't save. And, the flip side of this is when America has its day of reckoning, the rest of the world is going to experience the opposite, jubilation. It's going to be relief for the rest of the world to no longer have to live with this system where everybody else has to live beneath their means to support the United States and to maintain the U.S. dollar as a reserve currency. That necessitates that the world collectively has to produce a bunch of stuff that it doesn't get to consume, and it just supplies Americans with all this stuff for nothing. And a lot of capital, a lot of savings that could otherwise have been invested productively outside the United States instead is squandered by loaning it to the U.S. government or Americans so that they can buy stuff they can't afford.
Okay, so Peter, I have 100 ounces of gold, and I have 2 silver coin bags that I'm doing curl splits to build up my arms so I could be a great survivalist. And I walk outside my door in San Diego, and we have all this social unrest. What good, besides being able to barter with these metals, is it going to serve me? And where should people think of going to have a haven and watch this on television instead of being in the middle of it?
You're talking about where should they physically move?
Yeah.
Well, I mean, I don't know. I mean, I'm in Puerto Rico.
I know.
I'm here.
Were you there for the hurricane?
Well, I was living here. I wasn't on the island.
Oh, okay.
I left the island.
Yeah.
But I'm here to avoid the hurricane of the IRS. And
Okay.
so, the natural disasters aren't nearly as bad as that man-made disaster. But look, obviously, I think living out in the suburbs might be better than, or in the country, even beyond the suburbs, maybe better than living in a major city. And, I've been telling people even before the coronavirus, but now in particular, to stock up on stuff, while it's still there. So you don't have to barter. If you have a good supply of products that have a long shelf life, they're only going to get more expensive. Not only may they get scarce where you have to wait in line to buy them if they're available, but they're going to get more expensive. So you're going to get a better return on the stuff you buy in the supermarket than the stuff you get at the stock market. So you can load up on merchandise. But yeah, having silver coins is going to be a positive in case you do run out of stuff. The worst case might be for inflation. And this is something that I think will probably happen. But once the dollar really collapses and prices really start to go up, governments have a tendency to scapegoat, right? The government never wants to accept responsibility for inflation. The only all inflation is caused by the government, it's caused by the Federal Reserve. Human behavior, greedy entrepreneurs, capitalists, labor unions, they don't cause inflation. Inflation is made by the government. But the government always wants to blame other actors. And one of the ways they try to fight inflation is with price control. So they try to say, oh, we're going to limit the ability of stores to raise prices, and that's going to stop inflation.
They're already doing that.
That has failed every time it has been tried in the past. That's the only certain thing.
Yeah, well, they think inflation is rising prices. It's not. Inflation is an expansion of the money supply. Prices just, end up going up as a result of that. But the minute you try to cap prices, all you do is create shortages of the goods that are subject to price controls.
And black markets.
And then instead of rationing goods based on price, we ration it based on queuing up in long lines and reducing how much you could get. But then what happens is, if you really want to get something, you have to buy it illegally on the black market, right? That's where all the good stuff is going to be available. And to the extent that you're selling something illegally on the black market, you'll probably want to sell it in exchange for something like silver, where government won't know that you're making the sale because you're breaking the law. And also, if the dollar really starts to lose value quickly, merchants aren't going to want to accept dollars for their goods, because then how are they going to buy more goods if the dollar keeps falling? So they want to be paid in a medium of exchange that will preserve its value long enough for that merchant to turn around and buy something else with the money. And so it's going to be a lot safer to accept payment in silver than in just rapidly depreciating pieces of paper.
So, Mr. Schiff, in essence, we're talking about a likely change in the monetary system. So I know you've had a lot of debates about that. Let me say in advance that I'm not pro-crypto. I still don't see the intrinsic value there. But for example, we had 2.5 hours ago, I'm pretty sure you're familiar with Mark Yusko. He's a great guy, an actual asset manager. He's actually the partner of Anthony Pompliano. You've been on his show a couple of times. Yeah. So there are people like Mark, which also believes in sound money, that they think that the way forward in a new monetary system is going to be using the new technology that we've seen in cryptos. And hence, when things show like they might be moving that way, even the existing cryptocurrencies like Bitcoin, Ethereum, etc., might actually gain a lot in value.
Well, I don't think that any of the cryptocurrencies, including Bitcoin, would qualify as sound money. I don't think there's anything sound about any of them. Is it possible that there can be some speculation surrounding those currencies? There has in the past, that people may buy them for a while and the price may go up, certainly. But they're not sound money. And what I think is going to happen when this fiat system implodes is we will return to sound money, which is gold, right? So before the dollar was the world's reserve currency, currencies were backed by gold. And I think that they will be backed by gold again. In fact, the reason that America was able to convince the world to moving on to the dollar standard was because the dollar itself was backed by gold and redeemable on demand in gold at a fixed exchange rate. And so what that did is it enabled foreign central banks, like, the Bundesbank or, the Bank of Japan or the Bank of England, instead of holding gold to back up the pound or the Deutschmark or the yen, they could hold U.S. treasuries, which earned them interest, but they could convert them at $35 to an ounce of gold whenever they wanted to. So in effect, their currencies were still backed by gold, even though they were using the dollar as an in-between between them and gold. But, we severed the link to gold and defaulted on our promises in 1971. And ever since then, the dollar is just a piece of paper. But it's been the reserve currency, which has been a major problem for the world. And I think once the dollar collapses, the world is going to go back to gold as the primary reserve for fiat currencies, which is going to be great for the world because it's going to impose a much higher degree of fiscal discipline all around the world, especially in the United States, but every place else. But since the United States has been the biggest beneficiary of this monetary system, we have enjoyed the benefits of being able to write checks that nobody cashes, so we can live beyond our means. We can consume without producing, and we can borrow without saving. When we go back to a sound monetary system, in the short run, the most pain will be felt in the United States. We have the biggest phony economy that is completely dependent on the world accepting our paper in exchange for their stuff. And when that comes to an end, we have a massive day of reckoning. The biggest concern that I have is the government, rising and becoming more powerful, and us becoming more of a totalitarian state, because we're going to blame this collapse on capitalism and a lack of government regulation, which of course is the opposite. If we could stick with capitalism or re-embrace capitalism, we could overcome this in a matter of years. Capitalism is a very powerful system, and it would work better now than it did in the 19th century. As great as it worked back then, if we can only re-embrace it with 21st century technology, capitalism and sound money can do even more wonders in this century than it did in centuries past. But the problem is, if we don't do that, if we end up with a totalitarian regime, then there's going to be no recovery.
So far, to be honest, that's what we have been seeing. I have to openly admit that there was also an ulterior motive to the previous questions. I asked Mark Yusko here on the show, he would be interested in going through a debate with you about that, because in essence, the two of you have a very common understanding of how the economy works. I mean, he was mentioning the exact same things as you are. He was mentioning that countries like China and Russia are moving away from cash, and they're buying gold, for example, because they know that commodities and real money like gold are going to be next day's thing once again. But you disagree on that part. What is the future of cryptocurrencies in our monetary system in the day ahead?
I just don't think, look, fiat cryptocurrencies with no actual backing have no future, because they cannot work as money. They cannot be a store of value. They can't be a unit of deferred payment, or they don't even work very well as a medium of exchange or a unit of account. They don't satisfy the criteria of money. That's what everybody in the crypto community overlooks. They don't think that money has to have any value. It does. Yes, fiat currencies don't have value. That's one of the reasons they don't work. But legitimate currencies, before currencies became fiat, when they were legitimate currencies, they were backed by real money. The real money was gold. What gave gold its value as money? It was its value as a commodity. It was what you could actually do with gold that made it so valuable, what it could do as a metal. It's the fact that it's the best conductor of electricity in the world, and the fact that it's used for jewelry or dentistry or aerospace, or all of the characteristics. Gold possesses characteristics that other metals don't have. It is the most useful metal on the planet, probably in the universe, but it's the most useful metal that we have. But then it has other characteristics that make it such a good money, in that it doesn't decay, it doesn't tarnish, it's malleable, it's divisible. I mean, it has all these properties that Bitcoin copies. And yes, I recognize that Bitcoin has a lot of these properties, but at the end of the day, it doesn't have the single most important quality that made gold money in the first place, and that's its use as a metal, right? I mean, the world has used other things as money. Other commodities have been money because they have useful. Cattle has a use. You could eat it. Oil has a use, but they're not good money for all kinds of reasons. It's not good money. Gold is good money. Now, look, cigarettes have been money. And even in prison, cigarettes, they were money in Europe after the Second World War. The GIs used them as money. In prisons, they use them as money. But why are cigarettes valuable? Because people smoke them. You get the enjoyment of smoking it. But even if you don't smoke yourself, somebody in that prison smokes. It's because you have a bunch of smokers who have no access to cigarettes because they're in jail. That's what gives those cigarettes value. If nobody smoked in the prison, then they would be worthless as money. It's because of the intrinsic value of the cigarette itself. Now, then once you can break them up, you can exchange with them. There are other characteristics, that make a pack of cigarettes kind of like money. But it's the fact that people want to smoke them. And so Bitcoin has no value. Yes, I can give it to you. You can give it to somebody else. But at the end of the day, you can't do anything with it. There is no real world demand for Bitcoin, which means the price can implode at any minute. How could you have confidence in the future value of Bitcoin when there's nothing that you can do with Bitcoin? And there's never been anything you can do with Bitcoin. You know that there's all sorts of real life uses for gold. So gold is going to maintain value because people are going to use gold. But you don't use Bitcoin. I mean, people use it now to speculate. People buy Bitcoin because they think the price is going to go up. But if you don't think the price is going to go up, then no one's going to buy it. It's just going to go down. And then once it really starts to fall, then everybody wants to sell. And there's no natural buyer because there's nothing you could do with it.
You briefly mentioned crude oil before. We all know what happened with people getting squeezed with minus $37 of barrel price. We've seen that also trigger what was already showing like it would happen, which is the US government in essence jumping in to save the shale industry. Where do you think oil is going from here?
Well, in the short run, obviously, if we're not using as much oil, we're not, factories aren't producing as much stuff. People aren't driving back and forth to work. People aren't taking vacations and flying in planes. The cruise ships aren't running around and using up oil. So obviously in the short run, the price of oil is under pressure. But in the long run, the price is going much higher for two reasons. One, a lot of the capacity is going to come out of the oil industry, oil market. So production going forward is going to come way down, especially the higher producers like the U.S. shale oil producers. A lot of these rigs
are getting bailed out, though. Those are getting bailed out.
Well, they're not going to be producing. I mean, maybe they'll take the bailout money, but they're not going to keep producing oil and losing money. So I do think there's going to be a big contraction in that industry. But eventually, when the coronavirus is in the past, there will be more energy consumption. And so you're going to have more consumption against a backdrop of less supply. But when the U.S. dollar finally falls to the extent that I believe it will, especially against a lot of these emerging market currencies, that is going to really stoke an increase in demand for energy in those countries that are experiencing a gain in their currency relative to the dollar. And so I think in that environment, we could see a boom in the price of oil. And so I think ultimately that's what's going to happen. You're going to see a weak dollar and in a very, very strong oil market. Just when we turn the corner, it's hard to say, but definitely watch the foreign exchange markets, because once the dollar really cracks, which it hasn't done yet, but once we see it crack technically, then oil prices are going to be moving up.
Would you hold any fiat, Peter, during this phase?
Coach,
is Euro going to benefit the most?
You read my mind. That was the exact question I had. I mean,
any fiat at all for a while?
Look, I think gold is preferable to any fiat currency. I mean, if you look at gold has been increasing. We've been in a bear market in stocks, in U.S. stocks for 20 years, price in gold. So gold's doing well. I mean, I just read, the euro, I think I don't know, was it 20 years, however the euro's been around, but since it was created, it's depreciated 85% relative to gold. So, none of these fiat currencies could hold a candle to real money. But over shorter periods of time, right, the shorter your time horizon, the less risk there is in your fiat currency. So yeah, it makes sense to hold some fiat currency just to pay your bills that are coming in fiat currency. I mean, if you've got a rent, you got a lease for a year, and your rental payments they're fixed in dollars or euros, depending on where you live. So it's fine if you hold on to that currency so you can pay your rent because your rent is fixed. But I wouldn't hold on to any fiat currency thinking that I'm going to pay my rent in 5 years with it, because who knows what the rent might be then, because, how much inflation it's going to be. But yeah, for your immediate needs, it's good to have some liquidity. And yeah, it's, you can have some cash in a brokerage account.
How about Chinese yuan, Peter? They have all this gold that they've been accumulating for years.
Yeah, look, I'm one of those that happens to think that the next big move in the Chinese yuan and the Hong Kong dollar is up. You've got some people that think that these currencies are going to crack against the dollar. And I'm of the opposite view. I think it's the dollar that's going to crack. Okay. A lot of people are just looking for this dollar to go up. They think, well, there's all this dollar denominated debt. That debt's not going to be a problem once the dollar really starts to fall. There's this idea that there's a shortage of dollars. I mean, the one thing that there's not a shortage of is dollars. We are creating them like never before. We're printing them at the fastest pace in U.S. history, and that is only going to accelerate in the months and years ahead. So we are creating dollars faster than ever before. So there's plenty of dollars. There's dollars all over the place. Look at our trade deficit. Even the trade deficit we got yesterday, we had a huge jump in the trade deficit, a big drop in imports, but an even bigger drop in exports. So the trade deficit is a glut of dollars. These are dollars that we're putting into the marketplace every month for which there's no real demand. There's no demand to buy products. And so people are content to use those dollars to buy treasuries or other dollar-denominated debt. But what if they don't want to buy any more dollar-denominated debt? What if they figure they have enough and they don't want any more because they start to have a more realistic outlook on the future exchange rate for the dollar and they don't want any more? Certainly, we're not paying much interest. I mean, how much interest do you get on treasuries? Next to nothing. That doesn't nearly come close to compensating you for the risk that you take in holding on to dollars and those treasuries.
I'd like to get a viewer question in from Julie Smith. Where do you store your precious metals, Peter? Domestic or foreign storage? What do you recommend? I mean, there are a lot of people in the physical business that offer storage overseas. Or is a coffee can in the backyard the best way to go?
Well, the good thing about gold is that you can store a lot of value in a small place.
Yeah.
So a coffee can, a shoebox. Yeah. I mean, you can store gold. And I recommend that everybody have some of their gold, stored themselves. We sell gold. Schiff Gold is my company. I've got the best prices.
How much over spot are you with what's been happening in the physical market?
Yeah, I'm not there day to day, but I know that the premiums have gone up quite a bit. We're cheaper than anybody else pretty much, but yeah.
$4 over spot in silver and $100 over gold?
I don't know. You have to call up Schiff Gold and check.
Okay.
But, check my competitors. I just think that we have the most competitive prices. But yes, if you want to buy physical silver today, the premiums are much higher than they were a few months ago. And it's going to, we used to be able to ship it out the next day. You may have to wait a month or two or more. We can lock in your price, but you're going to have to wait because there's just a shortage of.
Why? Because of the coronavirus?
Well, the mines
they haven't
been able to fabricate.
Could we use that for an excuse too on everything?
Well, that could be part of it if some of the miners aren't on the job.
That's true.
But look, you can store money with a third party. I mean, we have a lot of clients that store money at goldmoney.com. They have storage facilities around the world through Brinks. At my broker dealer, Europe Pacific Capital, we still store a lot of gold and silver at the Perth Mint in Australia. So you can talk to us about, having gold. You can buy it and have it stored over there. It's good to store your gold out of the United States, just in case the U.S. gets kind of cute and, tries to pull a fast one. You've got some gold stored outside the U.S.
Yeah. You're talking about confiscation like the third.
Yeah, or just who knows? I mean, look, if things really get bad in this country and you just have to leave, it's nice to know that you've got some gold waiting for you. Maybe it'll be illegal to try to, smuggle it out of the country or something like that.
Well, Peter, I tell you what, really, you are a great ambassador for the shiny stuff. Okay, for gold, you're great, but you build the case. You've been right. I've also watched you when the gold market was in a bear phase, and you never lost your conviction. Thank you so much for coming here today and being part of the summit here for Forex Analytix. Really was eye-opening, I believe, for a lot of people.
Yeah, thanks for having me. And by the way, if people want to hear more of my perspective, they should listen to my podcasts, which, I do them 2 or 3 times a week, generally, sometimes more, depending on the market. But you can listen at schiffradio.com or any, iTunes, Stitcher, any of these places that you can do podcasts. A lot more people are listening now on my YouTube channel, the Schiff Report, because they want, now I've been doing with the video. So if you like to, see me as I'm discussing, and I'm doing the podcast now live on YouTube. And then once I finish, we upload the edited sound to clean it up a bit and post it to Schiff Radio. So they're there for people to download and listen, in their cars, or, well, maybe not so much right now. They're not commuting, but they just listen at home. But I'm trying to do what I can. There's so much ignorance that's spreading, right? I've been saying that the one thing that's spreading faster than the coronavirus is economic and financial ignorance. And I'm trying to, be the antidote, the vaccine to that, and to kind of counterbalance the mainstream media on my podcast. So make a point to tune in and listen to my take on the events, the news, the financial events that are taking place, rather than just listening to the mainstream.
All right. I have a suggestion for a theme song for you.
Yes.
Goldfinger. He loves only gold.
Well, I don't love only gold. That's the thing. I mean, gold.
You love your family too, right?
Well, no, I'm talking about for a portfolio. Gold is a small part of our portfolios. We invest in stocks around the world, and dividend-paying stocks. I mean, the thing is that, people equate me with gold because I think people should own some gold. I mean, most people in my profession, in asset management, financial services, they recommend no gold at all, which I think is crazy. I mean, I don't recommend all gold, but I think recommending no gold is even crazier than recommending only gold. Look, I recommend a balanced portfolio that includes gold. Although right now, because I think gold is so undervalued, it may need to be a little bit more, and especially the mining stocks. I think the mining stocks represent a great investment value for people who are looking to take the risk of owning a business. I think gold mining is a great business to be in right now. I think the profits are going to go up a lot, and therefore I think the stock prices will go up even more. And, we have accounts. If people are looking for professional management, we manage accounts, gold stock portfolios, individual accounts.
Yeah,
and
Euro Pacific Capital Inc., right?
Yes, exactly.
So you could find Peter all over the internet, and contact Euro Pacific Capital if you want to structure a portfolio with the narratives that Peter has just mentioned. So thank you again, Peter, for being with us. Appreciate it, and I hope that you and your loved ones remain untouched from this virus.
Yeah, well, so far we're all healthy.
Good, man.
That's the same.
Go ahead, Steve.
Looking forward to having you again. Thank you very much.
Okay, maybe next time it could be in person.
Okay.
Let's hope so.
All right. Peter Schiff, everybody.
All right, take care.
Thank you.